Laura. Oh, I actually have no sound on my phone on my laptop. Okay. Interesting. Hi everyone. Hope you guys doing incredibly well. Now we got Muhammad, we have Rani, we have Mario, we have Biba saying hi, we have Ben, we have Rani, we have Harry, we have Fakana saying hello, we have Nora, we have Sanjay, Suki, Balas, hello Abbas, long time no see. We have Ami, we have Balas, Ben, Bavika, Bibek, Camila, Chihang, Dennis, Fakana, Harry, Hendry, Maria, Marila, we have Power Up. Welcome back, Power Up. Long time no see. Your trainees is kind of like we have Essie, we have Sanjay, we have Suki, we have Victor. Wow, wow, nice to see everyone here. What I'm gonna do right now, I'm gonna share my screen so we can go straight into it in a real quick situation. So I'm gonna click screen, I'm gonna click share. Ooh, what just happened? Okay, cool. Now, first of all, we're gonna start the conversation by talking about, we want to start by looking at SP 500 straight away because this is the mother, father, sister, and brother of the stock market. So as we talked about it before as well, no matter what happened to the economy, World War One, World War Two, World War Three, whatever that is, it's always gone up. Yeah. So if you decided, you know what, I want to get serious about doing trading and investing, I want to do whatever it takes to get good at it. I want to say congratulations because you are in the right hand. So you can see it's always gone up really nicely. And so yeah, that means if you buy it, if you hold it long enough, things is gonna go to your way. Yeah, if you long it hold enough, if you've been buying stocks, it's a really good decision to be buying any strong stocks. So that's a monthly time frame. On weekly, let's try to draw on our technical analysis. So this is just 10% of what we always do. Like that. That means it's the best time to go all in is around 5,000. Best time to go all in is around 5,000. If I go to weekly again, like that, from there, it's the same based on our steps. Now this is where we're gonna do our technical analysis here as well. This based on our, let's look, just draw it just right there. So if it comes just around 4,000, it will be even so much better. But I would start to look to really get aggressive into adding my position when it's just below 5,000. Now it's around 6,000 right now. I'll get really aggressive to add my positions around 5 to 4,000, just right there. Anything below, if 4,000 is wow, it will be really incredible. 5,000 will be really nice. I'm saying this is really nice point because when it comes to around 5,000, you might be panic. You'll be like, wow, what if it goes lower? It goes to 4,000. Wow, what is the world ending? What if it goes lower? Normally, it will have some weird news that it has never happened before. Whether earthquake is coming, whether something big is coming, something like never heard before. Last time we have it is when the corona came, and then we have these, like mortgage crisis came. We have this inflation crisis came. So when it goes down to 10%, 20% like that, something we have never happened before. Assassination happened. Things that never heard before. It just happened like that. You cannot predict what's gonna happen, but it will scare you off massively. And when you're feeling scared, that's actually a time where you should actually act and do something. Okay. Now, and so based on our third step, I'll draw a support line just right there. Support line is anything below is more likely to bounce. So we are just right there right now. So if you go to daily, let's go to daily. If you go to daily, you can draw another kind of support line. For those who are new, I hope you remember how to draw your trend line or your support line. You really want to have a lot of touches. Um, Wider time frame as well as less steep. Okay, so obviously we have got a little bit small one here that just bounced very recently, just right there. Yeah, but that is not something very big. Okay, this is actually something quite small as well. And let's have a look. So we've got that. I think that's our extreme fear at that moment. Okay, so that's step number three. We're trying to draw another support line. If it gets to around this line, it'll be quite nice. Around 5.2, 5.3, just right there. So it's telling you that, okay, if it comes down to this support line, All of this line is a positions or is a place where you can add position. Okay. So it's not about finding exact line. A really great investor is where the dollar cost averaging at the certain price point that he really wants to get into. Yeah. So that's where I will start to be really aggressive, just adding positions on just right there. And what else? So step four, just trying to look at our chart pattern. So maybe we might have a really big kind of a double top pattern just right there, kind of here. Maybe there's another one just right there. Okay. And then it went down a little bit before it start going back to the moon again. So there will be a corrections kind of going on, which we're expecting just right there. And step number five, is we already kind of crosses over. Now it's not a good time to buy stocks anymore, just right there. So let's go to our, this is just 10% of what we use. We'll go through our strategy. So based on step one, just click on that real quick. This is really important. Remember, when we are at extreme fear stage, I just want to say it right now. When we are at extreme fear stage or when we're at extreme greed stage, you actually gonna feel really scared. Okay? So don't like so you're actually gonna feel really scared when extreme fear you're actually gonna think that things might gonna keep coming down, and you this is where a lot of bad news is gonna happen and you don't actually feel like buying it. Okay, an extreme, this is where you're supposed to buy it, but you wouldn't want to feel like buying it because you were feeling very, very emotional. And I told you before, and sometimes the best way to do it is just to set pending order. Okay, set a pending order to buy at a really nice point. So when in extreme fear, you can just click your button and just do it. Okay, so and if you remember what we talked about, so when we reach this sort of extreme kind of fear stage of the economy, April 19 a little bit, August 5 a little bit, um, and then a little bit just right there. So now we are in fear stage now. Okay, let's just come back a little bit. Let's just see here. Okay. So this is a stock price strength. So whenever our strength kind of like reaches at the bottom here, May 3rd, July 5th, and then we have really strength bottoming just right there. August 26th. Let's see what happened on July 3rd real quick. Go July 3rd. July 3rd. Okay. Looks like that. Okay, this price continues to kind of gone up even though it's at the bottom just right here, July 1st. What about this May 2nd? May 2nd. Okay, kind of May 2nd is kind of right here when the price strength kind of bottom. And then we've got another one, which is just here. This is like what? June, July 1st. That will just be right here, July 1st. Yep, just right there. And now we've kind of got another bottom since 26, roughly there. Okay. So the price strength is not very, very 26. Okay, just right there. It's not perfect. Price breadth, let's have a look. We have here April 22nd, we have July 5th, and then we have another bottom. July 5th is where things started to go up really nicely. This is April 22nd. And then we have another one, pull and call options. This is July 10th. July 10th. July 10th. Around there. Okay, July 10th, even though the price supposed to come down, it goes up for a few days before it start coming back down. This is when put and call options at the bottom. So we did have a crash just around there, December time. Now we've got November 6th. Now we're just around there. So it's not there yet. Put and call options is not there yet. We really want to start buying just around here. Okay. Just around there. So we're not there yet. We still need to be there. It's not strong enough. This is a buy zone. If you want to know, Raven, when can go all in and start to buy? It's actually here. So we are not there yet. Cool. And then we've got here. Yep, this is also the buy zone. Okay. This is kind of like the buy zone. Really can go all in and start buying massively. What is this? This is, oh goodness, this is August 5th. Okay, sometimes it's like here as well. Sometimes it's gone all the way back down there. So if you look at here, 18th of April, which is, yeah, 18th of April, which is a nice bottom last time when our safe haven demand gets to the bottom, when here gets to the bottom, and almost there, but not there. So today rally is very, very short-lived. You can see everything is kind of almost in the middle. It's not a rally that is gonna be nice and smooth like that. So basically that's on step one. Let's go on here inside real quick. IG sentiment. A lot of people ask me about that. Let's go on that. Crypto alert. Oops. Let's go on that. So and let's go on that. So based on okay, so let's get so based on our step, feel, and greed side, it hasn't looked like it's perfect at the moment. It's actually in the middle. Let's look at this open insider. We want the crossover. We hasn't seen that yet. So the CEO of the companies, the directors of the companies are not started to buy yet. They haven't started to buy yet. So let's go on this real quick. SPX 500. This is a Forex client sentiment. Okay. Now, we talked about it before. The way to use it is very simple. So you draw a line, the top bit. Okay, you can draw a line at the top bit. Oh, this get higher and higher. But anyway, it's okay. And then you draw a line at the bottom bit. This is the bottom bit. I think that's what we call something like that. That's the bottom bit. Okay, interesting. So you can see every time we are at the top bit, I'm going to use a different color for the top bit. So you can see at the top bit, the markets kind of rally, go up like that. Yeah. When we are at the top bit, can you see this is at the top? The market rallies like that. When we are a little bit at the top here, the markets rally. When we are top here, the markets rally. When we are kind of like a top here, the markets did rally nicely. Okay, so this rally is kind of normal, expected. If you use our IG sentiment to record it, you also see a very clear thing. Now let's look at what about if we're at the bottom. So if I'm gonna choose purple color, you can see this is when we are at the bottom. We have a bottom here. You see it touches the bottom here. The market comes down a little bit. And then so what else? So probably just right here. Okay, probably just saying the market might come down a little bit, probably. But let's continue. So that's based on that. And we've got this is okay, this is just based on how many retail traders are trading. It's kind of in the middle, nothing to look at. Here is when you want to sell, here is when you want to buy, now it's in the middle. This is on crypto. So crypto, we are in greed at the moment. Let's look. So we literally just touches. Let's look. We normally want it to touch at least extreme fear just right here. But it just came back all the way to neutral before you start going back up a little bit there. So greed means, things might just be a bit over, just right at the top. Just be a bit careful, just right at the top. Cool. Now, what I want to look at. So that's based on, okay, let's look at this. So based on the step one, a lot of the things are saying that we're kind of in the middle. So what is this? Here, it tends to bounce last time. Okay. And but the bounce is quite short. And then we've got like here, this is like a big bottom. So showing us that this is a really nice place to do things. Now we are here. We have a small bounce here. Same like last time. We also got a small bounce here. How do we do it? Oops. We clear this again. Anyway. Yep. So if you just draw all the way down here, you will see the bounce. If you draw all the way down here, you will see kind of the bounce. You will see all the bounce. Yeah. So that's where the bounce comes from. This is the support. Is keep bouncing off the support just right here. Um, a really, really good time for me to go a lot of big all in would just be that bounce instead. Just when it's 40. Okay. It's a deeper bounce. Now it's just a short-lived bounce, which is very normal because if you look at our seasonality, which is so important, if you forget about seasonality, if you didn't check seasonality, it's just going to be very tricky for you because based on our season, we have a downturn in the beginning of the market. We have seen that on the 15th of August, sorry, 15th of January. After 15th of January, we will see that things started to go up really nicely. Hence, last week, we were very, 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 very scared. If you watch the recording that we talked about last week, it's actually quite scary in that sense. Yeah. So, and it's saying that this rally, if it's really going to rally, we're going to have a last week of rally is also going to be quite rallying there at the bottom, just right there. And the rally is probably going to go all the way to the first week of February. Okay, that's based on what we see. Really important. You don't really want to go against this, especially when it's going up. So let me just say again. So you can see we have a really nice downturn. So we do our watch list on that day to be a lot of shorting. And once we've done that, we should have a lot of buying already on the 15th of January, which is the middle of the month, because you can see on the 15th it's kind of going up really nicely. Even the last week of January actually is still quite nice. And then this is the first week of February. And there is when things really started to go down for a month. Okay. So middle of February till March. So when it goes down for a month. Cool. This is interesting. Now, let's look for more right now. So you can see for Nasdaq, this is for a lot of the financial. Nasdaq is like technology stocks. Very similar here. On the 15th, which is kind of in the middle, we did have a come down going on. And then later on, we just have a really nice kind of uptrend going on there. And then we're gonna have a nice uptrend. Look at the red, sorry, not the red, the 15 years average. And it kind of till the middle of February. So we have a rally kind of going on just right there, which is scary, isn't it? Let's continue. And what is this? Germany. This is Dow. Yep. So that's kind of what happened just right there. Cool. And if I'm gonna go through election times, it's gonna be on here. So that's what we saw. We have kind of like that 2021 after election. We have like after January is a little bit like sideways and stuff like that. But you started to see the first week of February, things really started to come down a little bit, giving a good chance to go extreme fear to go kind of like in just there. Cool. Awesome. So that's what we see. What is this? And It's you can see it's not really a big downturn. It's not a big like down going on here. So that's just the tricky part of what we are seeing right now. Cool. So what I'm gonna do right now, I am going to go through some of your trades right now. So let's have a look real. Now, let me go to the platform right now. So that's based on step two. Cool. Yeah, so that's just based on step two. And then step three, when you really want to check guidance right now. Cool. Now let's talk about trades that we've done last week as well. So you can see the trades that we've done. You can see it started to rebound. The market's really started to rebound on 13th of January. Okay. That means if you've done any shorting stocks, 13th of January, which is what this is kind of telling is going down like that. And then it's kind of in the middle, it started to go up really nicely just right there. What is actually meant is that if you've been shorting any stocks, okay, if you've been shorting any stocks, theoretically, because the market rallies so bigly like that, if you've been shorting any stocks, theoretically, you are supposed to have what I'm saying. If you've been shorting any stocks, theoretically, you're supposed to have a what's that called? You are supposed to have things where the stocks actually gonna go wrong. That means it's gonna go temporarily wrongly. Yeah. Unless you short stocks in the way where, unless you short stocks in the way where the guidance of that stocks is really going down massively, like the world has never seen before. Yeah. Unless that's actually what can happen. Cool. So now let's continue real quick. So, but if you've been buying any stocks, obviously it will go to the direction that you want. Okay. So if you look at some of the stocks that we actually recommended some time ago, so I'm going to look at some of the trades right now. Cool. Like for example, the trades that we recommended, I don't know, 7th of January, let's say, let's take like a Boston Beer. I haven't looked at it yet, but let's have a look. Boston Beer. So you can see because of the stocks that we recommended, like Boston Beer, for example, we recommended since I don't know, 20th of December and then even 13th of January as well. What is it? 7th of January. Where's Boston Beer? Boston Beer. 7th of January. Yeah, probably just around there. You can see that even though the markets are rallying big time, the markets are going up big time. You can see if your stocks for example, are supposed to drop 30%. That means if the guidance is actually dropping so big, like the way you have never seen before, you are supposed to see that your stock supposed it is okay to come down. Make sense? But if theoretically it's supposed to go up. Okay, theoretically, just because the whole market was going up. So I just want you to be aware of that. So this is why doing guidance is so important because if your guidance is something that has never happened before, it's really, really powerful. That even though the markets are rallying big time, like what happened on the 13th of January, since you are still supposed to make money. Yeah. So let's see what else have we kind of got. I don't know. Agoma still. Let's see. Yep. So the market was rallying big time, but this is kind of going sideways on Agoma still. Okay. Because the guidance is only dropped by 12%. Let's go to Avita. Let's look what's going on. We have two Avita. Okay, it's going down. You can see Avita, we recommended that as well. Market was rallying big time, but on our guidance, full year now, the reasons why, because Avita said it's expected to reach cash flow break even instead of the previously. So the guidance was not very, very good. So it's supposed to go, like market was rallying big time, supposed to go up, but because we are using our guidance strategy, so it's really, really crucial. I'm just going to tell you, it's so important to go through your guidance. We have RB here just right there as well. Same, market was going up big time. We were shorting RB a week before this, two weeks ago, and it went down big times as well, which is just incredible. Now, if you look at commercial metal, let's see what's that. Commercial metal anticipates impact by seasonality. So this is not supposed to be in the trade because this is just impact by seasonality. So it's nothing. It's follow normal seasonal trends. So that's okay. And the last one is Apogee Enterprise. So this one's also like that. Let's have a look. The company expect full year approximately expected from acquisition. So you want to read it really carefully. You know, sales do decline. Expect full year sales decline approximately at 5%. That's not really a lot, which includes expected 30 contribution from acquisition. So the money made, the money is losing is just because of buying a new companies. An impact of lower than expected volume. Previous was 4 to 7. Yeah. So these are all kind of okay. This is like based on last kind of 2 weeks ago. Now, let's try something else right now. Let's have a look. What I'm going to do right now, not yet. Just give me 1 minute. Let me see. I can't remember. Yeah. I will give it to you. Just give me 1 minute. Just right there. Now, cool. Let's go into, yep. So if it is Moderna, Celeris, Zuvius, BP, Signet, Alphabet. So the only thing that we've got last time was an up 20% guidance, which is really huge, but you must go back to 3 years. That means your homework that you did last week, any of your homework that you did that you say actually gonna buy, and if you actually click the button to buy, you will be doing really, really well. Make sense? If you click the button to buy, you will be doing really, really well. So that's Alpha Tech. The rest of it is probably going to go sideways or it hasn't gone to the place. Yeah, like this is Alpha Tech where we are. Just right there. I'm going to share. Maybe you can see the password here. Yeah, like that. Cool. Now let's go to the next one right now. To look at your homework. Do, 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 do. So let's look at homework. So what is the criteria here? So the criteria here right now is the learning point right now is unless the things is really, really big, okay? Unless the things is really, really big. Otherwise, so unless your guidance is so big, it's like 30% really big guidance this drop, and things like really never happened before, then it doesn't really matter what is happening to the market, whether it's going up, whether it's going down. So this is what the situation is. I'm going to tell you right now. I said you before, but I want to say it again to you. That means that when we are at extreme fear situation, if you get to choose, you have extreme fear when the market is going up, if you get to choose companies, the guidance that's going up big time, you are actually really, really lucky. Yeah. Because it's extreme fear, the guidance is going up big time. Okay. That means you're extremely lucky because you close your eyes, you buy any stock, you're gonna make money. Okay. So when you really want to short companies, shorting companies, as you say, is a very, very dangerous sport. You want to do it temporarily. Once you take the money, you kind of want to run away. And you will really need to check seasonality really, really carefully. But more importantly, is that the guidance has to be so specially bad. Okay. Like what we saw on a lot of trades that we recommended 2 weeks before as well. Because it's a drop 30%. I think it's never really happened before. And yeah, even this RB was dropping quite a lot as well. Okay, so that's kind of what happened. Cool. So now today, What we're gonna do, we're gonna do 50-50. We're gonna have some buys, we're gonna have some short because today's 22nd, like 21st of January, Tuesday to next Tuesday. So seasonality is like really sideways. It's actually really sideways. It's not really nice down. But when we go to the middle of February, we'll be looking for a lot of shorts. Cool. Let me look at homework right now. Doo, doo, doo. So students are making contribution on this. Let me just refresh this a little bit. 22nd. So if you've been recording this 22nd, it will be really beautiful. You will see the market up or down just right here in a beautiful way. It's like, okay, let me just show you real quick how this actually works. So the markets normally rally when you see a really, really lowest point. So we will see a lowest point kind of 46 here, okay? This is kind of the lowest point that we ever got. Yeah, that's the lowest point that we ever got. The highest points on a seven. Okay, we need a 21 to see what happened. Okay, let's just go back to that to see real quick. So on US 500, let's see. What's this? Let's look. We've got, what is this? We got 17, 13. 13. Yep. 13 is kind of here. The market's really rally just right here because it goes to the 46. It's kind of the lowest. You can see it's always 59, 59, 65. This is on sentiment, right? IG sentiment. You aim for the lowest. Remember that? Yeah, for the lowest. And we need the latest one, 21st. Let's look at what's the latest one. You go on client sentiment. I normally like to click market data. And at the bottom here, it should normally show me. What is this? Most open position. Not that. Not that. Okay, I think it's on this page. Client sentiment is 52% short. So if I'm going to put it on there, 52% short. So we are not at the, let's look. Okay, 51% short and stuff like that. Okay, then you need to click a little bit more. Oops. Okay, then I got weird. 51, 18, 19, 16, 17. What happened? It's changed. The number changes. Refresh. Do. Anyway, so we saw the lowest one is kind of at 46, kind of 10th of, let's look, 10th of, yep, just around there. Just probably just right there. So now, in order for you to think that if the market is going to come down, if you want to think the market is going to come down, you kind of want to aim for the highest. I personally probably 73, 75 normally will be the highest just right there. So where are we? So we are at, from what I saw right now, it's kind of 50. So I don't think you recorded correctly. It's just around 50 something. When this 50 gets to around 68, like you can see, we've really gone up to 68 in the past. That's where I think the market's probably going to come down a little bit for you. Okay. This market sentiment. If you use the live account, you will see this. Okay. Interesting. I don't know where the 71 comes from. Just right there. But okay. Cool. Let's continue. Your homework. If you've done your homework, move your spreadsheet to the first page so we can look at your homework straight away. This is what Constella brand. This is 23rd. Beautiful, Ben. You're doing some really beautiful jobs here. So let's have a look. Now, this homework point is a boring point because this is the point where I'm gonna go through your traits to select what is good and to select what if you've been doing the homework in a really, really correct way. Okay, but this is the probably quite this is actually one of the most important bit. Okay. And for those who are new, you will not understand this homework. If you just finish week two video, you will not understand because you came in too quickly. Okay. This you're gonna understand the strategies kind of later on. Cool. Now let me continue. So if you are new, if you don't understand, just accept it. Um, so let's look at here right now. So these students are recommending Netflix, and I want to see the percentage, but I can't see. In progress, awaiting for no data. Uh, we do need to see a percentage, yeah. A difference of 14. This is what? Constella Brand. 13.4 minus 13.6. Okay, not sure where the 13.6 is from. I think it's from here. Okay, cool, cool. So nice to say you're going to check the PE. Constella Brand. Let's have a look on Constella Brand because you say it's dropped 14%. Let's have a look. Constella Brand. So you can see the markets are rallying big time, but this is just going sideways just like that. For that means it's shorting stock. This is quite an okay thing, but we are a little bit late. Then of So how long you gonna last this for? Normally the trades you will last until the day before the next earnings. Or we taught you the analyst strategy on the higher level. We taught you the strategy. If you see the analyst is upgrading this company big time, you also want to kind of run away on market screener. Okay. Yeah, especially if you are shorting. If you are shorting. If you're buying, if it is upgrades, you're very, very happy. Cool. So this is Netflix. We do see, need to see your numbers. We forecast 13 to 13 growth. We are pleased. This is the past. Okay. Well done. Let's go to the next one. Wow, beautiful. Polestar. Where's the percentage? 14%. I really like it, Victor. Very nice and clear. So Pyre ex expectations to be similar. This is January 16. I like to see the date of the earning release being released. Yeah, very good to have the date included here. Some people cut the date off, which is a bit crazy. For full 2024, the company now expect a mid-teen decline in revenue, around the same level as 2023, as the fourth quarter impacted. So it's the same level as last time. Let's see. How do you get the 14%? It will be nice to see how you do the 14%. Yep. It will be nice to see how you find the number 14%. Okay. Yep. It will be nice to see how you find the number 14%. Polestar, let's look. It says the same. It says the amount is the same as last time. So I'm not sure where you get the number 14% from. Okay. Let's look at Verbio. This is from, we've got 38%. Let's see. Previous the forecast between net and net expectation. Okay, I think I saw your calculation. Okay, this is a calculation. 45. Maybe you are using, see where the 45 comes from. 120 minus. Okay, that's a calculation. Nice, nice. Mid-teens. Okay, you get a mid-teens percentage decline. Okay, I got you now. Okay, the mid-teens, you make it 14. Okay, but it says the same level. Yeah, it's the same level of last year. So maybe it's not actually decreasing. It's the same decline as last year. So this one is 75, 125. So you minus that. So where do I see 120? Forecast 120 previously. And 75. Where can I see 75? Hmm. Okay, I can't find 75 here. Mid double digit. You literally just found a mid double digit like that. Wow, 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 wow. That's next level. Um, in the mid double digit range for the current, previously, the net financial year remains unchanged. Wow, that's next level. Mid double digit, what he did, he's mid double digit. I just put a mid double digit number. Wow. When we say mid double digit, okay. Yeah, we're supposed to get a real clear number. Yeah, not that number. So we actually supposed to go to directly to this website and go to the press release really carefully, go to the financial statements really carefully, especially on the press release, really find it to find what is the meaning of mid double digit. Because they got the number 120. Previously, the forecast has between that the expectation remains unchanged. Actually, it's just unchanged. They already say the debt kind of unchanged. So for verbal, let's look at verbal from 15. Probably not gonna do a lot of pattern. Yeah, it's actually gone up on the 15, just right there. Because it's remain unchanged. It's not a really bad thing. Cool. Parallel operation. Let's have a look. What is this? Previously making loss and then make them make 69. And that this has already happened. So we are not looking at this because this has already happened. Yeah, you also kind of need to look at it. Um, what is right now and what has happened before. So you have to go to the exact website, not go to Globe News Wire. You have to go through the exact, website. I think this works as well, but you have to go through 2020-24 guidance on the company website. Okay. The ended is already in the past. So, and then only then you can compare to see if it is going up or not. Moderna, let's get Moderna real quick. Sales forecast by 1 billion on weak vaccine demand. I think this has been continued to go down until recently. Maybe they have some news happening. Let's look at Moderna to see if there's any news going on. Market screener. In the type Moderna. Actually, I'm gonna go to all news. Click Moderna. And then if you go to news, if you see updates on pandemic influenza program, given money, lands another million for developments and stuff like that. Gets another 600 million, gets another 600 million, awards another bird flu vaccine. So all of this vaccine stuff, when the news like that comes in, it's like gone. You probably expect 17th of January this to be doing really well because they got the funding 600 million just like that 590 17th of January. Let's look at Moderna 17th of January when they start getting funding and stuff like that. So it's always been going down really nicely as the guidance is dropping since 14, and then suddenly on the 17th they start getting funding, and it's just a little bit like that at the moment. Okay. Hopefully, there's more bad news can happen if you wanted to go kind of like down. Getting funding and stuff like that is not a bad news for the company. Okay, cool. So let's continue. Um, and normally pharmaceutical companies like that, they have these vaccines going on and stuff like that. Flutter, okay, we've done that. Well done, Victor. Victor, you probably need some hand holding to take it to the next level. Yeah, you need some hand holding. So semi attack. So be back. We've got let's see. This is January 14, 48 minus 45. So 58, expect full year sales minus 45. It sounds like a good news to me. Ellie Lilly is a 27 up for the sales. Ellie Lilly. What is this? 14. Maker revenue 45 up, but lower than the guidance. So it's an up, but lower than the guidance. So it's up, but lower than the guidance. So lower than guidance. So it's actually not very, very up because it's actually lower than the guidance. So if I happen a minus, it's going to be, so the guidance says 45 to 46, but now it's even 45. So it's even lower than 45.4. So it's lower than the guidance. Is not a good buy. Okay. Let's get Harriet. Beautiful. Okay, we have got Verbio here. Really nice. Let's see. Now we have 120. Let's see where do you get a number 120 from. Okay, this is a previous forecast. Minus 50. Let's see where you get a number 50 from. Do at times 28. Mid double digit range. Okay, the company now expect before in the mid double digit million range in the current mid double digit. Yeah, we do have to go back to the company to actually see what it's actually meant. I don't understand where the 50 comes from. Assuming mid double digit millions is 50 million. Um, that is very, 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 that's a little bit too much, a little bit too assuming. We actually need to see properly on the company website. Let's see if someone else found it later. So this is immersed 3.2, but it's really good. At least you know how to minus, I think. Let's look at this. Immerse is will be 3.32 minus 2.67. 3.32 3.32 minus 2.67. Oh, 3.3, 3.26, 3.32. Mm. And then what? I looked through my website, couldn't find the press release, so require more research. Also, no info. This is different to calculation the press release. Okay, where's the 3.32 from? Let's see. Minus 2.67. We've lowered our forecast. Okay, I'm just gonna take it like that. I think you're using 3.32. That's the one. Change in EPS. Okay, you got this number. Now we want the guidance number. You're doing really, really well, Harriet. But what we do want is we want the guidance number. Okay. This change in the EPS, I think it's a real number. Okay, it's already happened. We kind of want the guidance number. But really, really well done though. Gonna say that right now. Really, really well done. Gonna say that right now. Cool. Yep, really, really well done. Gonna say that right now. What else we gonna get? Um, 24. So yeah, we did need the forecast. We have lowered the forecast, but taking that they have lowered the forecast, you probably think this is gonna come down. Immerse. Even the market is rallying big time. Immerse SA, are we doing the same thing? Or we do need the guidance? It's just lower the guidance. We expect to continue to wait, but they didn't really say how much is coming down. Yep. Okay. Well done. Right. Do you look more into this? Moderna, we've done that. What else have we got? Alpha Tech. Okay, let's look at this. 10th of January, 13th of January. Bank of America, well done. Okay, let's look at Bank of America real quick. Bank of America is a beautiful country company. So if you're able to buy right at the bottom on the PE ratio, you're just gonna make money eventually. Yeah, you're just gonna make money eventually. You're not gonna lose money on that. But let's have a look real quick. The problem is you just have to buy it at a really low PE ratio that historically has ever been. Okay, now let me look at this real together. Look at the difference in guidance. That's the first thing I want to look at. Okay, previous talking about 20 million, Q1 to Q3, they announced they make 14 billion in Q1. Okay, let me read then. Well done on the work, by the way. It's a beautiful work. But I'm just gonna see what we've got here. Bank of America reported stronger, pre-advanced to total revenue rose. Now, all of this, okay, net expected to reach between 40 on the fully taxable, accelerated second half of the year to reach by the fourth quarter. Okay, there's a lot of read here. Consolidation is expected to reach between 14 and accelerated in the second half of the year. Okay, interesting. I love that you're making this really clear. I mean, you put it down 6.7, 6.9, 6.9. Now it's 6.7. And now we've got that. And then true EPS. I love that. Earning estimate. I love that. Okay, beautiful. Now, what I'm gonna do right now, I need to compare. I need to see. Okay, Beats fourth quarter views. Is this a guidance? Net income of 6.7%. Okay, let's go through Bank of America right now to see how to do it properly. Bank of America investor. Let's go on that website straight away. And then we're gonna click on that. And then I'm gonna click on that. I click on that. Okay, let's look at the latest one. Interesting. So there's a lot of words here. We don't look at all these words. We only. So where do you find the guidance? Wow, slow pages here. It will be powerful if you can find the guidance in so many pages here. Let's look. I think I need to find the transcript. 6.7. Let me alternate F. 6.7. 6.7. Where are we? That okay. Reports. Okay. So you have been using something that has already happened in the past. Okay. Reports net income of 6.7. So what you reported is good, but it's already in the past. Remember, there are three criteria when you go to do guidance. I'm going to write down the three criteria for anyone who is new. Okay, when you're doing guidance strategy, the three criteria is you want it to be um in the future. So no past tense, and you want a lot of like, you know, something in the future. Reports. This is kind of already happened. So in Q1, when you are in Q4, you want Q1. Okay, you want Q1, expect guidance, you guys kind of result. Okay, that's the first thing, the most important thing. The second part after that, you want to compare, you want to start to compare. You want to have a lot of quarters and stuff like that. We will add on as it goes. So for that, right now, for what I can see, I don't think so. They're gonna give we finish off strong, looking forward. Okay. So for this guy, if you want to see, let's get the presentation to see if they give it. Transcript will be so much better. Okay, I'm gonna go for straight away to see if they give us a guidance here. 6.7, what you've got is already happened. Okay. Well done though. Really well done. Now, this is what I want. Okay, I just want the outlook. Remember, we talked about three places you can get the guidance, the transcript, the outlook, and the press release. Yeah, so this is all I need. So what I'm gonna copy that reading this will have no meaning. So what I'm gonna do, I'm gonna open the last time one. And if I really want to, I can open the last year one. Just click on that. Just click on, so because I want to compare Q4 to Q4, Q4 to Q3 a little bit. So I'm going to change everything to like Outlook page. Just right. Where is it? Let's look. Let's see. TTT, continue growth, 24 highlights. Where is the guidance? All other. Okay. So that is where we've got. Where's the Outlook? So we've got the Outlook on page 18, just after all other. So we suppose that the Outlook here, they didn't really give it the year before, which is interesting. 2023 financial result, continue growth, Q4 2023. Wow, this is not very consistent. Yeah, they're not too consistent. Okay, you know what? Um, what I'm gonna do, I'm gonna go on to their transcript. You can click on that. Let's see if they have it here. The transcript, they normally will have it at the end of the page, just before the Q&A. Okay. As we look forward to the next quarter, this here. Okay. So as we look for the next quarter, this is this language that we are looking for. We are looking for something that's or happened right now. We expect Q1 season elevation to be that. We expect expenses to be that in the Q1. That includes all of that. As we move through 2024, we expect the quarterly expense to decline. We expect a drop on the expense and stuff like that. That's it. Not a lot of numbers. Okay. Now, since they are using that kind of language, we want to go through the latest one on the transcript to see if the language is similar. So we're gonna go on that. Slide stability. Is slide what? Slide 18, isn't it? So let's see if they talk about it. Slide 18, the outlook. Slide 6, slide 8. Normally, companies are very, very straightforward. Some companies they hide it, but the more you, yeah, slide 17, slide 18. Okay. Now, we thought it was important to summarize some of the guidance through this morning. We hope this fine. So, in summary, we're looking for strong growth. We're looking for continued important segment. We aren't expecting much movement. We remain very strong and all of that. Okay. So, Bank of America is not a guy that actually give detail. What's that called? It's not a guy that give you detail guidance like that. So, you kind of have to find it yourself. So let's have a look. So they expect this to grow. Um, let's read what is it saying. They expect expect to grow sequentially to 15 in Q4, with two half of 2025 growth more than first half of the 2025 growth. Q1 assume two fewer days. Net interest income. Not interest expect to leverage anticipating 2 to 3 above the level. Now, normally we expect the interest to be lower. You can, if you reach 2023, we actually expect the interest to, let's look, revenue in the first, we expect this for next quarter. Okay, we expect more typical seasonal elevation means it's supposed to go higher. Okay, higher. Expect to be higher as well. Okay, cost actually higher. As we move through, move through means later on to decline from Q1. Very, very similar thing. Okay, very similar. So Q1 is always a little bit higher in expense in interest and then in the cost and then it starts to go down later on. Okay, let me continue. Expect total net charge of 50 to 60 point. Expect 11 to 13%. So based on what I read here, um you can't actually compare based on Bank of America. It's a nice company, it's a great company, but this company, unfortunately, they just don't give you a lot of clear guidance. Yeah, there's not a lot of clear guidance on here. So I love what you just compare, like what you just did just right there. But all of that is already happened. Okay. It's kind of already happened. 6.7 as we read that is kind of already happened. So let's say 3.65 a year ago is 3.21. At least you can see the earnings are still kind of increases and stuff like that. So bank fees beats forth because of the bank fees. So where do they get this number from? Interest to be 14.4. So I think they get the number 14.4 from here. 14.4, 14.6. The market screener gets a number from here. Subsequently growth to 15.5 to 15.5. Okay. And right now it is at, did you really say it? But okay. Yeah, you can't really compare stuff like that. But let's look at the PE ratio of this guy. Historical PE ratio of Bank of America. Let's click on that. Bank PE normally is quite low compared to technology stock. So if it comes to seven, it's actually a time for you to get in. I personally think it's gonna reach seven probably middle of March. That will be a nice time to get in. Now it's in 14. It's actually the highest it's ever been. Yeah, the P ratio. Well done. Click the 5 year so you can see it properly. Don't click all like that because you can't see because this is outliers. Click 5 years so you can see it properly. You're doing so well. Okay, well done. We go into this in detail just because you are on the higher level training. So well done. Let's do the next one real quick. Jinko Co Ltd is kind of like a Japanese company. It's a China company. So we are probably gonna avoid that for now. But it's beautiful. What you just did is beautiful. Remember, we want guidance. Was is a past tense, okay? What you did is really, really good, but we want guidance. We want not was, not past tense. Sometimes when you do it, you will be like get into the way and stuff like that, which is normal, okay? Because we are completely new here. Scramble lift. Let's have a look. Fourth quarter, third quarter, raise committed accelerated back. This is also raises quarterly dividend. This is on the past tense as well. Okay, this is the past tense as well. Netflix, I think all you gave me is the past tense now. Up 14. Yeah, they are all past tense. Okay, there's some outlook here. I like this. Anticipate strong growth, anticipate strong growth. But we want directly from the websites. Okay. Really well done though. Really well done. We need some present tense. Okay, we've got here. What is this? Charles, let me see what you use to minus. Expects revenue. This is good. Implied growth. Will be nice to see the percentage here. So what is this? Outlook. I think it's from ChatGPT, isn't it? Raise to five, aiming for historical growth rate 5 to 7. So this looks good because if I get where you come from, 5 to 7 is really high compared to 2 to 3. Even last time was not. Yeah, you want to go directly to the website to do it. If you don't know how to go to the website, I'm gonna go directly to the website Charles Sock for you so you know how to do it. So first, when you look at the company, don't look at anything. Just go directly to the website. Type this. This is the first step. Charles Sock Investor. That's the first thing. And then once you click on that, you click on here and you click on what? Let me see. This one. Okay. Just click the press release. Just gonna read that real quick. If you want the representation, you can. But what we want is I want something where make it really nice for me. So I will go into what is it? Let's see. Okay. View release and table. What is this? Stock information. I just wanted to go through the one last year's as well. So let's get financial report. Yeah, this one. Financial report. Okay, let's click overview. And we just click the report that kind of we want. So we've on fourth quarter now, release just recently. Press release. Okay, let's click on that. Let's see if they got guidance. Sometimes they don't give it to you. And you have to find it. Okay. Commentary. What is this? Uh, Strengthen financial forward-looking statement. That is all forward-looking statement. Okay, let's go to presentation to see if they give it to us right now. View tables only. Let's go back to here. Click on that again. With the latest update. Let's click the presentation on this. See presentation. Download report. So this is 21st. It's the same. They didn't really give it here. Sometimes US banks is like that because Bank of America didn't even give us the proper guidance. Revenue was let me look at the presentation. Re report webcast. What is this? This is the replay. Okay, so I need to register. Okay, let's go to Charles Schwab earning transcript. I'm gonna type like that. Charles Schwab earning transcript. And we want the latest one. Let's go on that. Good morning, it says here, everything we have consistently thought away was a strong year. We measure from our client perspective. I just want something with the present tense. You can see holistic. Turning we are well in the position of the lift off across multiple. We are the two fastest growing segment. Our base is like that. With that backdrop growing, we are making continue to invest, adding second. In 2000 effort, we will continue to invest all of that. Our third is that in 2000, we remain our priority. We cannot serve, continue to invest, strong competitive lift off as we look forward. So there's any guidance. Okay, this is a number now. The full year, this is all in the past. Reach is the past tense, so we don't read that. Capital stopping for the focus, shifting to the focus. We expect, now this is where the conversation starts to carry over with strong client growth. We expect, as with the year 2025-24, we included one rate cut. They think there's going to have one rate cut. Equity market return consistently with long-term average 6.5. They think the market is going to go up, sorry, 6.5%. We mean the SP 500. This is the bank, so they expect what's going to happen. Everything's to remain the same. So, yeah, financial ground, we influences momentum to carry on. We expect meaningful and diversified. Against this micro trend, we expect a total revenue growth. Can you see? This is the only thing you're gonna read. Expect total revenue growth. This is where you will copy. This result in a reduction, full interest, and all of that. Expense ratio, very good. They actually give it to you. They give you in the transcript place. 13 to 15. Let me see if I can find it on here. 13 to 15. Alternate F, 13%. I cannot find. So it's not on the transcript. Sorry, it's not on what? It's not on, okay, let's see, 13%. Percent. Yeah, it's not on here. It's just really quickly. Yeah, it's not on here. Yeah, you have to go to the transcript to read it. Yeah. Remember, we talked about three places you can find it. One of the places transcript. Okay. So we've got that. And once we get that, what we're gonna do, we're gonna compare as well. So where is that though? Where's the pages now? Yeah, here. That's the page here. So we've got this. Okay. Now what we want to compare between last year. So this is what you're gonna do. This is very powerful. I don't think so anyone knows how to do it unless you've been with me for a long time. Because this is a manual thing. But before we have all this AI and stuff, we used to do this manually. So this is obviously gonna be let me see. So we've got that. Tell me what to do next. So we've got this. Someone tell me in the chat box what to do next once we got that. So what we're going to do next is because this is Q4, so you can go back to Q4 again. So you can type Charles Schwab earning transcript. Now you want kind of like Q3 now. So probably just here, Motley Fool is going to give it to you. So you can compare. Remember, one data has nothing. It means nothing. We have to go back, to find something. Where is it? Oh my God, I literally removed that page. That's crazy. Anyway, what is this? Wow. Since when Motley Fool started charging. Anyway, let's go to click on that. Who is going to give us a transcript for free like this? Let's look. Market Screener. Yes, Market Screener is going to give it to us. Okay, let me just start from here real quick. I'm going to go to Market Screener to find the transcript for Charles Schwab. Charles Schwab. We're gonna go into transcripts. Okay, just go in transcript. They give it to you really nicely, just right there. If they give it 20, what is this? Transcript special call, this one. And then we have another one here in October time. Is this the one we look at? Let's see. Yep, that's the one we are looking. Where is it? Let's see. Is it the same thing we're looking at? We are continuing growth. Where did I find the page just now? Okay, it's here. Just before the Q&A. So it's gonna be with shifting our focus. Yeah, it's gonna be we expect total revenue growth. That's it. Okay. So now that's we've got the let's look at the previous one in October time. That's January. Let's get October time. See if they give us like that. Now let's spend a moment here. We're on the right in the middle. Okay, let me continue. Okay, Michael turning into cash, moving forward, exact timing, during our attention. Supported is a past tense. As we begin, we will start. To the extent we now anticipate, this is what we're looking for. Following our third quarter result, we anticipate full year revenue to increase 2 to 3% versus 2023. This is slightly above. For the full year, they now anticipate for the full year combining all of that. As we move into 2025, we have good momentum. We expect to further build. Keep it in range. Q3. Okay, cool. It's interesting to read about the banks because you kind of can know what's going to happen to the economies as well. So I kind of like to read the banks as well because you kind of can tell what are they thinking about the economy, whether it's good, whether it's bad, and stuff like that. They're also going to tell you what happened to the stock prices because that's what obviously what bank does is to anticipate what's going to happen to the stock prices. Anyway, so this is what we want. We want to now to read full year, anticipate full year 2000 revenue to be 2-3 compared to that. So what we've got right now, full year net margin to be growth revenue 13 to 15% result in back total revenue growth in the 13 to 15. This one to increase by 2. So it looks like banks are actually increased quite a lot because last time it's 2 to 13%. Now it's just increased to 13 to 15%. Let's explain why the stock market is going up big time like that. Charles Schwab. It's went up 6% just like that since the news. Wow, actually more than that. Wow, what's this? It's at the top already. Let's continue to go higher. Yeah. So if I compare for you, the only thing you need to look at, if I'm gonna put into my Excel sheet, this is what I will put. I will put that. I'm gonna copy this and I'm gonna paste it here. Oops. I'm gonna paste it like this is really important. I don't think so anyone knows how to do this unless you're on a higher level training and unless you've been following me for some time, where how to find the earning guidance on the transcript. So most people will not know how to do it unless you're on a higher level. So what we've got here, which I show you right now, that is that is for October time, 2024. This is Q3, something like that. Okay. I copy from there, the transcript. This is what October time. Then we've got the latest one, which is suddenly expect to be 13 to 15%. That's crazy. Bank normally don't increase that much like that. Okay. Obviously, we still need to take a little bit more time to actually read a little bit. This is January now. This is what? 21st of January, 2025 now. So it used to be 2 to 3%. Now is 13 to 15%. Okay. And then you keep doing it. You do it, you go to the back. Exactly what you did. Okay. Just go through it to the back and you will know whether it's really nice to buy Charles Schwab. Yes, Charles Schwab, it looks really nice and it's a really good company, but you want to buy at low PE ratios as well. Charles Schwab historical PE ratio. Um, I think it's a really strong stock as well. Let's get the stock price for Charles Schwab. Okay, like that. So let's have a look. Yep, it's at the high right now. If it gets to 13, that's where I will be looking to get add into a lot of position for Charles Schwab just right there. Okay, it's quite high at the moment. Cool. Let's look at the next one real quick right now. Well done, you're doing so well. It's good that we're able to look through transcript to learn how to find stocks. Okay, look through the transcript. If you really can't find it, transcript will normally have it. Earning release and presentation is a shortcut. When we first started, we just go through the transcripts. Okay. And you have to Google it. My market screener um gives you very clearly. Yeah, even the higher level training, you should get it for free. So cool. Let's look at the next one real quick. So we can recommend some trades as well. Cool. So that's for learning, yeah. That's for learning purposes. Let's look at beautiful Abbas. Energy 150 minus 15. So that's the 150. I love that. But I don't know where you get the number 15 from. Expect in line. Now it says in line with the strategy outlook. So I think it's in line. Okay. Expect to revise 15 revenue for the full year. I don't know where you get it from. And provides a guidance of at least 10x. Wow, it's huge. This is huge. Why do they give the guidance of at least 10x? We might just go and buy like that already, EOS. I might close my eyes and just buy this company right now, even without looking at the stock price. I'm going to put it on the watch list straight away. Well done, Abbas, for finding it. EOS Energy. I haven't even looked at the stock price yet. That's crazy. So I'm going to say, is this what you type or they type it? Oh, this is what you type, isn't it? Is it what you type? Make sure it's not what you type, yeah? Otherwise, it's going to be crazy. So 10x revenue growth from the company. This is it. So it's a buy. And go to the next company straight away. 31st of January 25. EOS. Let's see. What I'm gonna do, I'm gonna go EOS energy. But the only tricky part here is that this is the energy kind of sector. So which one? EOS? What is it? EOS Energy Enterprise. Let's have a look. So that's the one. So you want to kind of compare in the past to see is always doing that. So let's have a look. So based on February last time, where is it? March. Oh, it's always doubling. Okay, it looks like this is the company always do that during this time of the year. So can you see just right there, like that? What else we got? Can you see it's doubles as well? 3 to 7 double. Now 7 to 12 double. So if you look back into the past, I think it says the same for last times as well. Yeah. Looks like the revenue is always like that. Why is it like that? And then we got May and February. This is the fourth. This is like, sorry, this is okay. Cool. What I'm gonna do now, I'm gonna go to manually on look at this stock to see is it always like that. Okay, same thing. You can see the more I do it, the more you're gonna get it. Investor, especially for those who are completely like new. Just click on that, and then we click on revises to provide. Okay, that's cute. Financial filter, and I'm going to 2024. Click on that, and then what am I looking for right now? Announces secure appointment. Okay, let's just go into the what real quick. Let's go back, go back. Because this is on invest. I'm gonna go on stock, financial quarterly result. Okay, so press release, click on that. Now you do the same thing, you're trying to find out if it's always like that, like they always double massively like that. Outlook, I want the EPS, profit margin, path to profitability, market outlook. Wow, the outlook is not simple. The outlook is long. Anyway, let's read it. 60 to 80. Now, 60 to 80. Then 50 million. 15. This one, 16 million. So where's the 10x growth, my friend? This is November. Okay. Let's look at the latest one. Q3. I think that's the latest one. January 13. And then they are expecting to be 150 million. Is there a reason? Um, Company leading manufacturing expect to 15 by increasing customer deliveries, primary stabilizing bottleneck, improvement delivery enhanced by existing suppliers. So it's not because they have more sales, it's just that they increase their operation in line, ah, revenue in line with company strategy outlook. Why is it in line? Full year growth is expected driven by increased production. So by increased production, it's not really by increase of like sales securing. In 20, we will navigate ramping our manufacturing full time. We expect this 10x growth to be American top supplier, to be opportunity, success, comprehensive, and stuff like that. Okay. Interesting. Interesting. So we just need to see if they always do that all the time. Just give me a minute to see if they always do that all the time. They always have 10x growth all the time, or is this their very first time? Click on news. So they have this like 10x full year growth. Let's go to 2024. If they say the same thing here, let's copy and paste Outlook. November, that one. Probably not. Do they always have 10x growth all the time? That's what I'm trying to see right now. This is February. Power on. State of that provides preliminary results. I think it's always the same. Let's click on this. Full year revenue expect 14 a decrease. Okay. So it's not always happen, but it's interesting. So which one is it though? EOS Energy Enterprise. Let's have a look on that. In EOS Energy Enterprise. EOS Energy Enterprise. But in terms of the guidance that we see hasn't actually reflected yet. This is the date is 16. So you expect the stock to go out on the 16th. Let's look. Okay, the stock is already all time. Okay, it's like that. And then on the 16th, it will just be kind of like here. And then pull back a little bit. Let's look at the PE ratio of this guy. Probably in the negative. US Energy. US Energy Enterprises PE historical ratio. Let's look. Yeah, it's actually not there. Okay, it's here. 3 years, it looks like it's always zero. Yeah, it looks like it's always zero. Okay, interesting. Interesting. So the question is, do I think it's gonna keep kind of like going up? We still need to go back on here. Now, the only thing is that this is just a production, okay? It's a buy. However, it's just the production and the manufacturing fast, manufacturing being fast. They ramp up the manufacture. But in life, we actually need the sales to go up, but it's not showing the sales is going up. Unless you can read it carefully, they say that the sales increased by 10 times. That's where the real stock is going to go up. Same thing with Tesla. Tesla, they ramp up the manufacturing big time some time ago, but nothing happened to the stock price because we don't really care about manufacturing going up as an investor. What we do care about is what? Is the sales going up? Okay. Well done, though. Let's go to the next one. It's very, very good find. I'm so proud of you that you found this. And it will be even powerful if it's sales going up. Let's go to the next one. Oh, you did it. Well done. You actually did it. Well done. Let's have a look. So, um, okay, let's read it from the beginning, yeah? Now, the outlook revenue is always 60 to 90 million, and then 60 to 90 million. And then Q3. Okay, where do I start? Okay, Q3, 30 to 50 million. Q4, 60 to 90 million. Q4, 60 to 90 million. And then what? Q2, 60 to 90 million. Q3, 15 million. Bit tricky, isn't it? And what we are reading right now is Q4. Is it? Okay. Yeah. What we are reading right now is just a news that happened out of nowhere. Okay. Achieve full year revised revenue guidance and provides revenue for at least 10x for the full year. Okay. This is not a earnings. This is just outlook. Okay. They're just providing the outlook like that. So the Q3, obviously, it looks like they drop reducing because significantly below closure of the supply chain. So now they're reversing what they already happened in the past. Now I'm going to tell you something, yeah. If this is normal, to like what we have before, 60 to 90, and suddenly they 10x, it'll be a really good buy. But the problem right now is um they dropped massively in the past because of the supply chain being closed. Now they literally just reopen it, and go back to what they usually have, which is like 90 million. Now they're gonna expect 150 million. I kind of need a little bit more. Look, before was 50, yeah. Look at it carefully. Before was 50 in 2023. 2024, they double it, 50 to 90. So we always expect this company revenue to double. So if it is 90, you're gonna double. It's gonna double to 15, at least 180. So I'm gonna write it just right there. So historically, it used to be 50 and then double to 90 million in revenue. And now it's only 150 million in revenue. So not really doubling compared to historical data. So, yeah. So you want quarterly historical data to come double like that really nicely. Anyway, let's go to the next one. Vico instrument 0.09 minus 0.18, 50% sell. This is expected to be 0.09 compared to previous guidance of 0.09. It looks beautiful. While non-expect compared to 0.35. Why is it like this? Look, the non-diluted is very similar, 0.35, 0.39, but the gap one increased massively. Can you see? So this is just accounting standards. This is just accounting problem. It's not it's not that they increase massively and things like that. Because if you look at the non-gap, it's the same. 0.36, 0.35 is the same. But the gap one, which is a different accounting standards, they just minus like that. VICO. Let's have a look at the stock price of this. Yeah, it's just going sideways. This is a playing on accounting standards. Well done. You're doing so well, Abbas. Yeah, you're doing really, really well. Well done. Keep going. So ASIM, let me see. You have Ovolus and what else you got? Okay, let's look at your Ovolus. Growth 30% compared to previous. Wow, very simple ASIM. We need to compare things a little bit. But it looks like a good buy anyway. Ovolus. Compared to the previous 2020-24 result, 30% growth. The problem right now is we just need to make sure 30% growth is something it has never really happened before. Then this will be really beautiful. Yeah, this will be really beautiful. So let's go. Ovolus. It's always been up. Since when? January 31st. Okay, is this jump up like that? Okay. Because it jumped 20%, maybe it's a small pullback before it come back. So Ovolus historical PE ratio. Let's have a look. Oh, you need to compare. Okay, I'm gonna put Ovolus in here. Okay, Ovolus. So it's a 30% increase. Um, please go back and see if this has happened before or not. Okay, just go back quarter to quarter on the original website and you will see where this has happened before, or even the market screener. Well done. Let's go to the next one. We've got, where's this? November. Let me go to the bottom for the J. J, you're doing so well, by the way, because of the putting so many things on top. We just need some latest one, all right? Do we have anything for come? Just put it on the first page if you did the homework, yeah? Well done. 50 minus 40. Expect to report marginally ahead of full year and ahead of mid-40 expectation, ahead of mid-40. Revise. Expect revenue marginally ahead of full year. So it's a small increase compared to full year 2029, ahead of ahead of the mid 40 millions originally expected. Mid 40 million. That's another language here. That's another language. Mid 40 means what? 45? Yeah, so you have to go back to the page to look at what is the original expectation for the year. You have to go back to the previous company. But this is a good buy anyways. At least it's going up, I think. Argentex. I haven't checked that. The reality, I have to go back to the initial year and check what is mid 40 Argentex. Okay, this is a UK company. Oh wow. Wow, what's going on? Let's type Argentex to see if it comes out. Argentex. Argentex. PLC historical PE ratio. Macro trend to see if they have it. Argenex, maybe? Argenex or Argenex? Was it Argentex? Sorry, it's a different one. Let's go to Guru Focus then. So we always have 14, 24, now it's 19. Oops, not really clear, but okay, okay, not very, very clear. Can't really see. It's rank, what is this? P ratio current 181. Normally 17. Look at the P ratio of this guy is very high. 181 is very high. Hmm, a bit too high. Normally we would just buy like that. But the P ratio is a little bit too high. And I have to check to see what happened. I will put in the watch list. Well done, Sarah. Let's have a look. We're supposed to book for a one-to-one. 14. Tom Temcott. Okay, this is missing forecast. This is already happened in the past. Keep going, Sarah. You're doing so well. Let's go to the next one. RB Ernest. If anyone done the homework, please put it on the first page, yeah? Otherwise, I'm gonna skip yours. Okay, let me just go into anyone who done it, just let me know. Put it on the first page so I can see. Uh, mm, I'm gonna look at this real quick. Our powerful Yihang. I'm gonna go to the bottom for you. Cool. Now let's have a look. 21st of January. Well done. Argentex, that's what you found as well. Mid 40. I love that you put this on. You're doing really well. Increase so long. You're mid 40, you put 40s as well. Okay, okay. I will give it to you, all right? Argentex. Good. So what does it say? It says, okay, I'm gonna copy that. Mid 40 means what though? It's crazy. Go back to the early years to see what is the original expectation. Okay, ahead of mid 40. Crazy. Now let's go to the next one. We've got Seiko. Since so many people did it, so what's the percentage? 700 minus 555. Can you see? This outlook. Very simple. 26. We buy this. Well, the only difference is because it's a different year. That's what I don't like. If it's different year, normally I want 2023 as well, just to see if the increase is massive. Let me have a look. 155, 177. It's always increase like that. Seco Environmental. Number four, Seco Environmental. Cool. What is it? I'm gonna copy this. I would tell you what's the tricky part. Actually, I'm just gonna copy that. To full year like that. Copy that, and I'm gonna click the full year like that, and just put it on. I need to see 2023, 2024 to see 23 and 22 to see if the increase is powerful. Okay, Seiko environmental. Let's have a look. Do. Wow, it's all-time high already. It's crazy. But if you bought it, a lot of our students did bought it on the 16th of January. You should make some money. I haven't looked at the stock price, but let's have a look. 16 is here, 17. Yep, 16. You missed that. Get 17, 18, just right there. Cool. Interesting. Next one. And what is this? Maria Genetics 15. Wow, you only found one? That's crazy. That is crazy. 0.14 minus 0.12 divided by 0.12. The difference is 17%. So huge. Crazy. Okay. I didn't know that this is so huge. 0.14 to 0.12 is so huge. Okay, Marriott Genetics. Let's put it on that. Marriott Genetics. Number five, we've got Marriott Genetics. What? 0.12 to 0.14. They say 17% increase. It's not a lot though, but the percentage looks big. Now, November to March, 21 to 213. November to March, 17 to 14. Let's click on that. Marriott Genetics. Do 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 do. Margin is 6 expect 0.1 versus his prior guidance. Okay, let's do this manually real quick to see actually what's happening here. Marriott Genetics investor. Let's see. Financial reporting, SEC quarterly result. Where is it? I think this is the old one. I think you've been giving me the old one. It's nice to see where is this sentence come from. Marriott Genetics, 15th of January. Let's go to market screener to see where does it come from. Marriott Genetics. So let's see what's happening. Go to news. Go to all news. 15 will be expect. Okay, so they give a new news going on. Expect 2025. Okay, this is interesting because um it's actually showing the importance of backtesting the past. So I'm going to show you here. Announce the guidance like that. Now, we don't just click that. We want to look at last year's as well. So I'm going to click news. I'm going to click like guidance, sending guidance, analyst recommendation, insider, press release maybe. Okay. So the January 15, what I'm going to do, I'm going to go to same time last year. If it comes up, what's this? What's that? Charles Schwab done Marriott. What is this? 15th of January. Yeah, that's a full year guidance. Comment. Reflecting an increase of 0 to 3% compare. So it's actually 0 to 3%. Yeah. Um, this is what we're looking at. Marriott Gentis announced a full year selection, introduced a full year financial guidance on the 15th. So we go to the guidance straight away here. Revenue increase 8 to 10 compare, excluding approximately, excluding what? Excluding some cost and stuff like that. So that's what we got here. Let's look at the one we've got in January. I want to look at the news in January for this guy. Cool. So I'm gonna click on that. Is it this one? No, January. This would be, where is it? January test line 27. They didn't really say it. Release full year result to release strong report, strong revenue and full year result. Okay, let's see. Is there a graph there very clear like last time? Okay, this is the guidance here. Okay. So full year was 747. The growth used to be 10 to 11%. Okay. Now, um, it's only 0 to 3% compared to like last time. So 0% means it's actually not increasing. And companies that's not increasing means going down. Yeah. So 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 where do you so on market screener you saw that number 0.14, 0.12. Not entirely sure where you get that from because the number is here 0.1, 0.7. Probably something in the past. Okay, cool. So we're gonna remove that because it's actually 0 to 3%. Okay. So hence it's saying it's really important to go to the company to have a look properly. Next one, Compass, 15th of January. Where do you get all this from? Did you type it yourself? Okay, 1.36 minus 1.225. Sometimes it's nice to put a screenshot of where you found it. Yeah, you're doing so well. Just put a screenshot of where you found it. So we know where the number is actually from. So I can go back and trace it if I want to find your number. So 1.36 minus 1.225. So I can see the dates as well. But I think you got it from probably there. Expect higher provides 24 guidance. Actually, I know where you come from now. I think I know where it comes from, but I didn't really see it though. Anyway, where am I looking? I'm looking at Compass right now. So it's 11%. We will normally just buy it like that. If I trust your number, and let's get the Compass. Compass on NC. So this 11% would be nice to have a little bit more. Historical PE ratio of Compass. Historical PE ratio of Compass INC. Just trying to see how is it like. So it's on negative side. Okay. But at least the EPS is going higher and higher. Okay. Okay. Should I trust the number? 1.5 to 1.29. Okay, I'm gonna type again to see how do you get a number, okay? Compass INC. What is compass? This one. Just to see where you get a number from. Sometimes if you put a screenshot, we don't have to do any of that. Now, 15th of January, Reverses guidance. I think you got it from here. Well done. Well done. You're doing so well. Let's click on that. If you just screenshot that, it will be really powerful. So, uh, revenue 5.61, 5.47. Is that what you got? You have 1 point something. Hmm. It's interesting, isn't it? Maybe this is just the first part. 1.36, 1.26, 1.36, 1.26. Okay, good. So the number is correct. Now we just need to see in the past, has it always been like that? Okay, so I'm going to copy that. Compass, INC is the buy. Now you have to go back to see if this increase is normal. If this increase is usual or not. All right. Well done. Doing so well. Let's look at the next one. Guys, how come you guys cannot find this company? Neogenomics. Um, what 735? Where is that from? Wow. Beautiful. Minus 6605. Beautiful. You minus just like that. Wow, that's beautiful. But the only thing it will be even more beautiful. Okay, we can see the difference. So look, last time the difference is 562, increased by 50K, 56650 now to 735, almost 50K as well. So it will be even more beautiful to see if this is something normal or not. But new genomics, let's have a look. New genomics. Okay. Let's see. 13%. Yeah, we just need to see like 1667173, and then we've got 141 to 152, and then we've got 122 to 138. So the increase looks like very normal kind of difference. Okay. So this is okay. It did went up, and we just need to be like 13% is okay. It would be nice to have more. But more importantly, I want to see if this 13% in the past, is it always like that? Okay, so what I do want, I want another year of low, 2020, 23, low and high, not the actual. I want the low and high, the same page you do it for that. Okay. Because if I use 592,661 and then 661 to 72, I will see that it's actually decreases. Yeah, it's actually decreases. Should I do it? Okay, let me do it for you. But I'm just doing it for the sake of doing it. But if you do it, you will see it. It's actually decreases because look at the actual is 592 to 661. So it's 60 million. 60 million. Now 2225 is in the middle of that. So it's not like it's never happened before. It's okay. Intuitive surgical, 25%. Expect fourth 1.92 to 2.41. 2 billion to 2.2 billion. And then that one 1.89 to 1.87. Okay, this looks good to buy as well. Intuitive surgical. Yeah, it's crazy. Students are making big money. January 15, you've been buying on the 15th of January. Let's say if you miss that, you still go up like that. That's insane. Now, if you look at it carefully, the reason why it does that is look at it carefully. Historically, when we are at is it January 30th? You can look historically when we are at where are we? Okay. Do you really have a lot of historical going on? 25% is actually quite big for such a big companies. Yeah, 25% is huge. Um, let's look at the PE ratio of this intuitive surgical. Intuitive surgical. Two. So it's at the highest of the highest already. That's crazy. That's crazy. If we buy now, you want to sell in the first week of February real quick. Let's see if we got more. Two. Alpha Tech, we done that. what is this? Sunwave percentage 53 looks big. Okay. Preliminary. Preliminary is something that's already happened though. For the fourth quarter, something has already happened, isn't it? We want the guidance. Sunwave, 14th of January. Can't find Sunwave. Sunwave stock price. 1 month. Wow, crazy. So this is what date. Now, I will tell you where the logic comes from. The date is released on the January 14th, and the ended is December 13th, 31st. No, normally it take 3 months for you to have the result, but they give you the result earlier. They give you the result that, is the highest that they ever got in the quarter's revenue in the company history. Yeah. So 14th of January, if you have bought it, not this, if you've bought it, it's 14th of January, just around there, kind of there. It's kind of like break evens and kind of stuff like that. So it's just to show us that it's really important to look for guidance, to look for things that it hasn't happened before, rather than looking for things that's already ended. Yeah, well done though. TSI, this is 300% on LTD. Oh, this is a Japanese company. Normally, I would just buy it if it is not Japanese company, but looks good. TSI, let's look. We don't have a shorting. I think the shorting one that we have last week, we can continue as well. Okay. Engineer Communities Group. This is an AUD company, Australia. We have a lot of Australia people here. Engine Adrian, are you here? Long time no see. What is this? Communities Group. Communities. Can't type this. Oh, this one. But okay, I don't think we're allowed to trade. Wow, crazy. 19% since what date? 14. Wow. Anticipate up 2.224, now 2.29. The difference is 19%, almost 20%. If you bought it on the 19, is it 19? 14. Let's say you skip 14, yeah? You get on the 15, yeah? You're still up like that really nicely. Okay, interesting. Um, Collagen Pharmaceutical, INC, 27%. Maybe this is the one, collagen, but it's just a pharmaceutical company. We're not a fan of that. Okay, it's going to be like that. Okay, that's about it, I think. We got a few companies there going on. If you want to short, we have some short last week. If you've been holding it and you ride it all the way till the end of February for the shorting, you'll be fine. If you've been buying, if you look at seasonality, first week of the thing, you kind of want to get out already. So yeah, so that's kind of what happened. Just remember to go back to test a little bit more. You Hung, if you're watching this, I kind of want you to put one more year in, one more quarter in. I know that you're just comparing between two quarters. Let's just put one more year in, compare at least 3 quarters, so we can actually see and back test it in a really nice and powerful way. Let me look at the chat box right now. I haven't looked at the chat box for the longest time. Let's have a look. I have a look at the training for the longest time. I'm gonna start looking through the chat box now. I have been looking through it for the longest time. Wow, there's a lot of messages. That's crazy. That's insane. It looks like we have a two different world going on. Let's see. Um, wow. Farkana, congratulations. Farkana, just say you make some money on your live account. That's crazy. Well done. We got what else? How did you know it's going out? Check out the earning release was due tonight. Farkana, how long have you been relevant? Closes, how do you manage to restart the earnings? Stay amazing. Newbie guide. Did you raise the buy? Well done. Prediction compare. Read out on prediction. It looks like we have two different world going on. Predictions and compare previous quarter usually by the sense of quarter and the balance of this. I think the earnings will be good. It's good script and so who is TN? This is good. It's like a whole new topic on the chat box. That's insane. Well done because group with the old Oh my God, we said I'm not even just things doesn't make sense. The British gonna be on the week four. Well done, well done, well done. Cool, well done. You guys are doing so well. Oh my God. Well done. So that's it for today. That's the traits that we recommended today. You guys are doing incredibly well. Looks like we have a different topic this going on. So well done, everyone. I hope you guys are doing incredibly well. We have Abbas, we have Adrian. Adrian, long time. You need to send me a text. We have Balas, we have Ben, we have Bobby, we have Bibi, we have Chihan, we have David, we have Digo, we have Denise, and we have Fakana, we have Harriet. Well done. We have Mary, we have Marina, we have Muhammad Nora, Power Off as well. Ronnie, Ren, Roxy, Sam, and San, Sanjay, Suki, Tio, Victor. Well done, everyone. Hope you guys are doing incredibly well. So we learned that sometimes in the US banks can be quite tricky. We do have to go through the transcripts to read the things kind of in a proper way as well. We also learn the power of historical rhythm in stocks. Okay. So whenever you do anything, please do that, the jackpot strategy. First step, really trying to look for that. And then second, look of historical rhythm and then look for the guidance and the P ratio. Cool. You're welcome, everyone. We've got Roxy, we've got Ben, we have Chi, we have Rani, we have Roxy, we have Babika, we have Chi, and everyone. Well done. For students who want to take it to the next level, as you say, some of the best way, if you find it is difficult to understand and stuff like that, watch your week 3 video one more time in a really, really quick way to see if you can have a slot for the hand holding apprenticeship training. Well done. You guys are doing so well. I'll speak to you guys very, very soon. Well done for that. Really, really proud of all of you. Well done. Speak to you soon. Bye bye.